quick little video for end of financial year. I was going to do a whiteboard thing, but my whiteboard is full of way too many notes for me to be wiping them off. So instead, I've done of paper. Just quickly, so tax deductions. If you're blind and living under a rock, you're going to be getting smashed with ads this time of year. Hey, spend money, save money on tax. It'll asterisk, maybe. Come spend some of ours if you want, but consider this first, because I've seen way too many people and even business owners go, oh, it's a tax write-off, cool. It's not free money, it's not free equipment. It's also not difficult though, so if you're not entirely sure, going to give you a quick understanding. Not financial advice, not an accountant. Talk to your accountant, do your own financial blah, blah, blah. But here's a quick little rough break. So if you are going to be making between 45 and 135k this year, that little bracket there is going to be, you're going to be taxed at around 30%. For this bracket, 135 to 190, you're going to be taxed at 37%. If you are running a good enough business and you're fortunate enough to be on 190 plus a year, well, you're going to be paying the 45%. There's also Medicare levy, so it's going to be like 47%, 39%. I think for this one, 32%. I think that one applies to that bracket as well. But at any rate, it's a decent amount of tax. It is what it is. I'm not here to talk politics. It's a lot of tax. Now, people go, oh, I've got to buy stuff before end of financial year. Well, you don't have to. It seems weird for a shop telling you you don't have to spend money, but do your own due diligence. Think about, plan, right? Don't make impulse decisions. I mean, we all do, but do your maths. If you have the money to spend, and if there is a way to make yourself more efficient, or there are consumables that you should buy, it may well be in your best interest to buy them now before end of financial year. It might not be, I don't know, that's something for you to work out. But here's the reasoning behind it. Say you take a tool now for $1,000 and you buy that, and you're in, what did I say, I did the 37% tax bracket for this example. So you buy that tool for $1,000. You would have, if you didn't buy that tool, you would have paid $370 in tax on that $1,000. Now that you've bought the tool, you're not going to pay tax on that $1,000. Instead, you have a tool which can hopefully make you more efficient, which will hopefully make you more money next year. It's not free money. If you hadn't have bought that tool, you would have had $630 left in your pocket. So you may well decide, no, I'm going to keep the money in my pocket. I want the money in my pocket. I've got bills, I've got savings, I've got other plans, whatever. But keep in mind that efficiency, because especially when you get in the higher tax brackets, the only way to make more money is to almost exponentially make more money, because the government takes a bigger slice of the pie. And, not going to whinge about it. It is what it is. But if you can have something like some cool equipment to make you more efficient and make you more money, then that tax is potentially not going to hurt as much. So yeah, again, not financial advice. Do your own due diligence. But yeah, I've seen too many people thinking tax deductions are free money. It's not. It's just you don't get taxed on the things that you spend that are legitimate business expenses. So yeah, have a good one.